203, 203, 4, 2.5, 203, 4, 2.5. No, 203, 42. Okay. 20186.9, 20186.9. Let me check. Two zero three eight six point nine 203. Okay, so this is a good price coordinates. This box, let's just draw the boundaries and leave the middle or the background. Yes, and this is a good reference point, higher time frame reference point, which will be relevant for the next some time. Okay, so I'm watching how the price will react to this line specifically, and I'm going to watch it with respect to, wait a minute, wait a minute, wait a minute. Okay, 1 minute till the 5 minutes close. Okay, this line specifically 2186.3, 2186.3 plus the 5 minutes close. I'm going to watch how the 1 minute is going to react to this point. Just happening too fast. So this is a good reference point. Wait, 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 wait. We have 1 minute till the 15 minutes candle close. We can get a good reaction out of this point now, for now, and uh, later. It can be used multiple times. So wait, I'm gonna execute. Wait, wait, wait. Fuck. This is a good as reference point. Okay. If I get a reaction out of this point, it's leaving. I don't know if anyone understand this. I'm bit in a bit of a hurry, but yeah, from this point, okay, it points. We'll see how the 5 minutes closes. 5 minutes about to close in the next 30 seconds. This candle is going to close the 5 minutes. I have put my stop loss at break even. We'll see how the price reacts to this point. I can first this level that would be to this point. Even if you don't understand, please just try to understand what I'm trying to do, because it's in a hurry. It's going really fast. This point first. First, this point. This is unchecked. My stop loss is at break even. The risk to reward was relatively like nothing from this point. Even if it knocks me out, I'm gonna try it again with respect to the 1 minute. This is a 1 minute time frame I'm operating now currently. Okay, for the 5 minutes about to close in the next. This is the new 15 minutes candle. This is the new 15 minutes candle. 15 minutes. This is the new 15 minutes candle. This was the previous 15 minutes candle high. The ideal case would be for the next 13 minutes the price to stay up and above this point and close above. Then we can expect a good reaction. uh Even if not, we still have 5 minutes backing us up. We got a closing above the 5 minutes. It can knock me out. I'm gonna still enter again. On a 1 minute, the minor trend has shifted. Still getting a good reaction. This is the problem. I do not want, ideally speaking, I do not want the price to close below this level or this low, because if we get a closing, this can be a minor retracement or a fake out. But because it's an overall downtrend, so what I'm trying to do, because I have already shorted it, gotten out, it's just me trying to predict a bottom, and it's a really tough job. It takes usually 3 or more tries to get in line with the bottom. Okay, it's going to refer back to this point at some point in future, I know, because leaving it's wickless, and which is not an ideal, and it closed below this low. That's not the good. From this point to how many points? 15 points. The next stop would be this point. Would be the next. But what's really messy about this, that on the 14-18 candle, it's leaving it wickless, which is ugly. Not the ideal. Okay, take out this high, take out this high, take out 208. Okay, let's see what's going on the 5 minutes chart. We have 40 seconds till the 5 minutes close. 30, 35, 34. The ideal would be for the 5 minutes to stay above this point, and that would be the ideal case scenario. Then I can expect that it's going to move further up, and then it's going to give me a closing. That's a good indication, and I'm front running that indication. We have 10 minutes left till the 15 minutes close, and 30 seconds left, or 14 seconds left till the 5 minutes close, right? 8 seconds. But still, I do know that for sure at some point in future it's going to refer back to this price at some point. So it's good for scalps for now, because it's building up a position, or market is turning, so it can chop around, chop around. But meanwhile, I can take some scalps. But this is a if you take an account of this coordinates, these are the coordinates. I'm just gonna show it once. If you take an account of this coordinates, mm, potential, this can be a potential bottom. If not, I'm gonna try it from somewhere around here. Okay, take out the high, take out the high, take out the high, take out this high specifically. If I get what am I probably targeting, what the would be the targets for this, the ideal case would be for the price to revert back to this point, around 60-70 points. That would be 292.7. 292.7 would be the ideal case for now. 292.7, where are you? 292, 292, 292, 292.7. The first target reached 292, 2 20292, 20292.7. 20292.7 is way up. Okay, so that would be around 70 points. This would be the ideal case. I'm taking partials along the way. So okay, from from this to that, that would be the 27 point move, 30 point move. That's a good with relative to or no risk at all. See, I draw, I started, you don't forget. I don't know who is watching, who is not. I don't really know because I'm not watching the chat. I'm sorry, I'll get to it, but uh, just in a bit of a hurry. Okay, so it's leaving this wick, and we have gotten the closing. Okay, we have gotten the closing above this 5 minutes. 5 minutes validated. The next 5 minutes would be if I clone it, move it up to this point, and move to the 15 minutes chart. Move to the 15 minutes chart. The ideal case would be for the 15 minutes to close above this level. That's really possible as we are moving like really fast towards the upside. 7 minutes till the 15 minutes closes. That's really probable and possible that we get a closing above. But for the ideal case, this would be the next point for the 15 minutes to target, or closing above. That would be a good case. That would be a good case for the counter trend moves. You don't have to forget that I'm taking counter trend moves, counter trend trades, and targeting this point specifically as for now. But this box, what I'm giving the coordinates of, is more often than not usually a bottom. Whenever the price moves way too fast towards these points, these are the points which are, for me, are the bottom. On a 1 minute, you see this, the price getting retraced. This was wickless. Okay, so this was wickless. The price is going to refer back to this point at, as I mentioned earlier. So I've gotten around 30 points on the partials. I'm leaving the rest of the trade. Okay, the ideal case would for the 1 minute trend to stay intact would be to not close below the 1422 low. 1422 low, where we are getting reaction from as for now is is a is not really like surprising. I'm gonna tell what I'm talking about. Okay, uh, on a minor gauge, this price can be used as a minor gauge for the price to climb. Use it to climb up and above. I'm gonna mark it blue. Blue. This can be this. If the price uses this as support, it would be the ideal case. Otherwise, this is what's keeping the smaller time frame trend intact towards the downside. I'm taking counter trend trades with my stop loss at break even, and I've taken partials. So yeah, the 15 minutes. Let's see what's going on the 15 minutes coming. We have 4 minutes till the 15 minutes close. 5 minutes basically till the 15 minutes closes. The ideal would for the 15 minutes would be to close above this point, close above this high. I'm gonna 15-minute valid, 15 valid. You have to keep this in mind. I'm taking counter trend trades. Uh, uh, it's going to refer back to this point. It's okay. I'm gonna try it again at this point if it comes back and stop me out. Still 30 points on the partial is not that bad. Plus my risk is relatively nothing basically. It takes me usually 2 or 3 tries to get along with the counter trend trades, which turns out to be the bottom. So I'm managing risk. Okay, this is the minor counter trend shift from this gauge. This is not a very good thing. This is not a good thing. So the minor trend on the 1 minute has shifted towards the downside again, which like candle close above, above close, above close, above close, closed above, close above, wick. This is the first we got the wick close below. I hope at this point I'm, because my trend, my stop loss is at break even. I'm just hoping at this point that this is a fake out. Okay, from the 5 minutes point of view, 5 minutes point of view, we already have gotten a closing above this point, gotten us the validation. So from a 5 minutes point of view, the 5 minutes trend would shift if we get a closing below this level, right? Below this level, then I can expect this whole move, to be basically not worth trading. Okay, well, let's see what's going to happen within the next 3 minutes. Within the next 3 minutes, 15 minutes and the 5 minutes will close, and the new hour on will open on the QQQs. The main problem I can see, as it was price was going up and above this point, I can see that the price will refer back to this point, the 418 candle. I'm referring this again. At some point in future, maybe it's the time. Maybe it is the time, but ideally, if it gives me a validation, then moves below and wick down, that would be the ideal case scenario. See, I'm gonna explain what I'm talking about. Within the next within the next 1.48 minutes, the 15 minutes candle will close, giving us the validation. If it gives me the validation, then it wicks down. Then it's a good thing. Then it's not bad. But I cannot deny the fact that this is imbalanced. 1418 candle, this is imbalanced. Okay. If we get a closing above this 1 minute, then the broken trend would get like again be constructed again. That would be a good thing because that would give us the validation for the 15 minutes. Yep. So it's intact again. Okay. It's intact again. That's a good thing. 55 minutes chart. Move to the 5 minutes within the next 46 seconds. I do not want the 5 minutes to close below this wick. 1420 wick. If it gives me the closing below, then this can be expected as a choppy zone until next time. Then I'll do nothing. If it knocks me out now, ooh, wait. Oh, okay. It referred back to, still haven't touched it. The new candle open. This is the new 15 minutes we got the reaction from. The new 15 minutes candle. This is the new 15 minutes candle and the new hour opened. So it's I'm gonna expect some volatility. 5 minute, the 5 minute, we got a closing below the 5 minutes. This place area can become a chop, but still got in the partials out. Let's see what happened on the 15 minutes chart. We did got a closing, but that's considered a relative closing relative to the previous 15 minutes candle high, and it hasn't still taken the come on. See this point. Why is this? This candle is still imbalance. The price is going to refer back to this point at some point in future and this point at some point in future. But meanwhile, I can still, it hasn't taken me out. All I can do is to wait. Fifteen minutes still got validated, even if it was relative close. Either I can expect this chop to happen, but I'm not going short anymore because we have reached this level, this specific point, and now I am targeting this point specifically 293.7, 293.7 on the US100. I don't know what that would equate to on the futures. Go. But the problem with this is there are two imbalance candles. That the first one is on the 31st, 1431, and the second one is on 1418 on the 24 hours. Okay, run it up, run from this point. 43 points, 43 points. Okay. Okay, the next ideal case would be we got the validation on the 15 minutes. The next ideal case would be for us to get a validation within the next 11 minutes. This is how the market climbs. 15 valid 15 minutes valid. Still I am running the position on, let it run, reach this point. It's leaving all of these. You have to understand, as I mentioned earlier, that it usually takes me 2 or 3 tries to get to the bottom. Meanwhile, I take scalps. So whenever the price is leaving these sorts of wickless candles, like this, and like this, it's telling me that it's going to refer back to these points at some point in future. So what the ideal case, or would be the ideal strategy to tackle all of this shit, would be for me to take partials and wait some time after like holding it for the swing. From this point, 48.53 points with relative to no risk because my stop loss was at break even. Still the 1 minute trend is still intact. 52 minutes still. The ideal would be for the 1 minute to not closes below this. That would halt that 1 minute structure, break the 1 minute structure basically. Okay, let's see what's going on the 5 pins. The new 5 pins has closed. The 5 pins close, giving us the closing above, and this is wickless from the upside. We have 4 minutes till the next 5 minutes close. It will move up, up. Yeah, this point. Okay, get it. Now it's big. 5 minutes has given us now from this point to this point. This is a dealing range. I don't want the price to go below this 1430 candle, 230 candle basically. 230. Yeah. If 40 minutes, 40 points in, still running the trade. Okay, we have gotten a closing below, first closing below on a 1 minute. Okay, let's check where our take profits. The structure closed below minor structure is shifting again. Still 50 points more left. The ideal case for now for the scalps, even for the scalps, 50 points more left. But this is the warning sign on a 1 minute, but not to be taken seriously, because it's on a 1 minute time frame. So as my stop loss is at break even, I've taken partials. I'm gonna let it run. Let's see where it's going to happen. Plus, the ideal would be for this with the next 7 minutes to close above this 15 minutes high. Close above this 15, stay above this 15 for the next 7 minutes. One, let's go, brother. Okay, I think that's gonna hold the price for some time. Some time. You've gotten because there's a huge dealing range. This is a dealing range on the 5 minutes. The price is allowed to move back to this point, but not giving a closing below this point. So it's a huge dealing range. I can expect anything for me to be like if I was conservative, I would have taken like complete my trade off at this point, but I'm not. I still know that the price will refer back to this at some point, but I'm gonna just leave it till this till for 92, 92, 92, 92, 92, 92. 285, 285, 285, 285, not 92. Okay, so we got in a fake out from this point again. The trend is still intact. If we get a closing, another closing below this point, that this can become a chop, but I hope not. And we like build on this candle. 38 candle move up because it has given us a closing above the 37 candle. So that's valid on the 1 minute time frame. Move up, move up, move up. 35 more points, 35 more points, 35 more points. The low. That's 90 points. Ah, yeah. Okay. The new 5 minutes candle has closed. The new 5 minutes candle has closed above this point. This is the new 5 minutes candle. It's allowed to move below this point, but not close. Okay. 31 seconds till the 1 minute closes. Closed 13 seconds. If it gives me a closing below, then this can hold the price. Then give me a relative close to this point. Still relative. This is the dealing range of all of this. On a 5 minutes time frame, the price is not allowed to close below this point, but it's allowed to go there. It's okay. It would still be valid. Okay. Let's We've gotten the validation within the next basically 3 minutes. The next 15 minutes candle is about to close. I want the price to stay above this high, the 225.8 high. For the next 3 minutes, it would be a good validation. Then this point and the new candle, this point and the new candle, 15 minutes candle would be the dealing range. Okay. One minute. Okay, 1 minute is still intact. Move up, move up. 85, 85. Basically 80. Yeah, this is the next high. Okay, if you look at it from the point of view of the hourly chart, okay, this is the high of the previous hourly candle on a higher time frame. The price is for the hourly time frame, the price is allowed to move up and wake up. Okay, wake up, but not allowed to close from the perspective of the bears, right? If it closes above this point, then the hourly will be validated, and my thesis for the basically a turn of the market will be valid also. So I am trying to take counter trend trades, hoping that it becomes the trend towards the upside. I hope that makes sense. 43, but you have to understand that this point 31 candle is imbalanced and 18 candle is imbalanced. The price is going to refer back to this at some point in future, maybe today, maybe tomorrow, I don't know. But whenever it comes to this point, I'll be the one who is going to take the trade again towards the upside by validating it basically. Okay, this is wickless from the upside. Everything is operating. This whole structure is standing on the 38 candle, 1438 candle. We still haven't gotten a closing below the 38 candle on a 1 minute structure. Within the 30 or basically 20 seconds, the next 15 minutes candle is about to close. 12 seconds, the next 15 minutes candle is about to close. Okay, so as for now, it's validating my point of view in terms of the trend. Basically, this is the new 15 minutes candle from this point to this point. This is the dealing range. The previous candle is the dealing range. From the point of view of the 15 minutes, the last high has validated the trend. And now from the point of view of the 15 minutes, because it's a 50 point move, because the ATR is too high today, on a 15 minutes is nothing. 15 points or 50 points or 40 points today. It's a downtrend. So, okay, let's go. 2. The next stop would be 83. I'm being conservative with the target, right? This is generally where I'm going to just get out. It's not giving me a closing above the previous candle high. Not a bad sign, but not a good sign either. I do not like what's happening here. From the point of view of 5 minutes, 5 minutes, 5 minutes, 5 minutes, the price is allowed to move below this point but not close within the next 3 minutes. That would be the ideal case. If the 5 minutes closes below any of this wick, that would be invalid, and that would create a contradiction between the three. 15 minutes, 5 minutes, 1 minutes. I'm just taking the narrative of these three time frames as for now. Okay. See, if we get a closing within the next 50 seconds, 47 seconds, if we get a closing below this 46 wick, that would not be good. 47, in the 5 minutes. Within the next 1.48 minutes, I do not want the 5 minutes candle to close below this point. That would be a contradiction and therefore chop. Five minutes still got validated. That's a good thing, but broke the structure on the 1 minute. The minor trend has shifted again. It's moving down, obviously moving down. I want, ideally speaking, for the trend to get re-intact, the price on the 1 minute needs to close above any of this previous candle high. And we probably will get a contradiction. Yeah, within the next 12, 10 seconds. I don't think the price is going to go back up that fast. If it does, that would be really good. And we have a relative close. Not bad. Not really bad. 50, the new 5 minutes candle. Still on the 1 minute, I want the price to close above these points. There we go. Nice. Nice. Oh, God. 83. Come on, give me 83. And we are back down again. 52. On a 5 minutes time frame, that would we got a closing below that point and a contradiction, probable contradiction, leaving this the dealing range. But still, on the 15 minutes, all of that happened for the validation of the 15 minutes time frame. I've gotten the validation on the 15 minutes. Somehow, uh, from this point to that point, statistically speaking, this is still valid. It can still knock me out. I've taken out partials. I'll try again after some point. But this chopping condition is not the ideal, basically, for me to take a decision while my stop loss is at break even. Because if I move my stop, that's a problem. If I cut my trade out and it continues to move up, I'll be leaving like 48 more points on the table. That's not good either. So I've gotten out of that with some partials, and I'm gonna just leave it for now. Guys, quick question. Is the stream lagging? Can anyone answer me in the chat? Is the stream lagging? I was not much putting much attention to it. Okay, thank God. Okay, so you have to understand that this is a chopping conditions, right? It got me like it closed below that point. It got me a closing above that point. This is usually an indication of a range. So my stop loss is like right around below this point. Like as I started the stream, I hope anyone of you is watching here is from the start is still here. Okay, so I entered like at this point. So my stop loss was about 7 points. So I'm still chill, and I've gotten out with about 30, probably high, yeah, 33 points, and half of my trade is still left. So as it was coming down to this point, I thought it might check this candle again, 418 candle again, but it didn't. It moved up. So it's giving me an indication at 431, and the 418 candle will be revisited at some point in future. So that's for sure. But my target is current target for the scalps is this point. So as a general narrative, this whole box is usually used as my base for the swing trades. Okay. So whenever the price reacts to this point, move below this point, close above this point, I'm jumping in. So it's good just to reward. So I'm still in the trend with the partials. I've left my partials open, so it depends on the market whether it's going to give me or not. So from this point, the trend got still intact. Okay. But as the previous from the previous behavior, it can become a chop. Okay, it can become a chop. So I have two logical conclusions to come to: whether to close my partials, even completely close the trade, or whether to leave it run. Because the outcome or the probability of this is like, but now can be a chop or the upgrade, or it can move down. But still, I'm not risking anything, so I'll just stick with my initial plan. Okay, so as if I stick with my initial plan, I can make a case that it's making making a close above the close above the close above the close, again getting intact with the trend. 1 minute is getting intact with the trend again. 56, the new 5 minutes candle opened. The new 5 minutes candle open, it gives me a closing below this point, and if it gives me a closing above, then move down, then this can be a choppy zone expanding itself into higher and higher time frames. Usually that happens. So, but not like as I should be eternally optimistic with regard to my trend analysis. So I'll just see it in a way that hopefully it goes to my target and even above. Being optimistic, eternally optimistic phase. Okay, so if it gives me a closing below that point, from this initial behavior, it gives me a closing above this point, then it gave me a closing below this point, closing above, closing below, closing above, closing below. So in a trending market, that does not happen. In a trending market, the market builds on the previous candle's low. Basically, that's how the market progresses. In that ranging condition, it makes sure that it closes on a certain time frames to move back to the opposite side. So 57, the new hour is about to close. Hour is about to close. From the hourly perspective, if you go with the same logic, the market is still if okay, it's allowed for the market to close at this hour, move up and wick up, then close below this high. From if you go with the trend on the hourly, it's a downtrending market, right? Close below the wick, close below the wick, close below the wick, close above the wick, close above the wick, close above the wick. So on the early time frame, the logic would say, okay, if you are trading counter trend and making a bias with respect to your trend, you can think of it like 260 high. 260 was the high basically, right? Hourly value 260, right around here. Okay. Still, it's wicking down but not giving up, closing on a 1 minute. So, being an optimist, surprise bar. That's not really a surprise bar, but still, 59, 1 minute, 30 seconds till the hourly close. 30 seconds till the hourly close on the this electronic trading hours, and 30 minutes closing on the regular trading hours. And the 15 minutes will also close the last hour of trading. Okay, give me a closing above. What would be a surprise bar in this case scenario? It gives me on a 1 minute. You have to, I don't know if you can see what time frame I am on, but this is a 1 minute time frame. Okay, so yeah, 260. This is the new hourly candle. Just don't get euphoric. This is the first candle of the hour. It might retest its low, might not, but still, careful, careful, buddy. Okay, 79.3, 79.3, 79, 79, 79, 79.3. Come on. You have to keep this in mind. A lot of these candles are imbalanced. I'm referring this to 31 and 18. This box, the green box, I'm gonna show the coordinates again. This green box will be used again, but I will not use it just blindly. I would be taking confirmations according to what I'm doing right now. If you understand the logic, you understand a lot of things. Okay, so any area of interest should be validated according to the things I'm talking about. Come on, baby. Come on, come on. It has taken out this high. Okay, so retracement is expected, obviously, but the 1 minute is still intact. I know I was leaving the money on the table because as the trade evolves, the risk to reward is also evolving. I'm currently hanging in profit, right? So as it gets closer to my take profit, the risk gets higher and higher. Wait. Okay. 237, 274, 274.5. Still haven't gotten the closing. The 1 minute is still intact. And thank you very much. Thank you very much. So, just for a recap, 90 points. Is it good enough? Good enough? I think it is. With relative to no risk. That's the key point of it, the trades, right? That's the key point. With no risk, like relative to the risk I'm taking, what was the risk? Like 7 points, 8 points? That's nothing. 1 to 10 risk to reward ratio. But that's just a skill, still a scalp. Okay. So if it still continues, probably it will. Probably, but I'm out. It will still continue until the 1 minute trend or the 5 minute trend is still intact. Okay. 41. You have to keep this in mind. This is the new 5 minutes candle opening, the high of the 5 minutes, the low of the 5 minutes, and about 3 minutes left to the 5 minutes candle. If we go to the 15 minutes, the 15 minutes ideally the 15 minutes should, ideally speaking, the 15 minutes should give me a closing above this point. Let's move this up. Let's move this up, up. We have 8 minutes till the 15 minutes close. 5 minutes. 5 minutes. Okay, on the 5 minutes, we still got validated again. The same point is being used as the validation for the 5 minutes and the 15 minutes. So this box, the high of this box is really, really, really good. It will still be used as this point has been used. The high of this box will be as used as that also. Okay. Okay. We got a closing on the 1 minute low. That's still a relative close. I do not believe 1 minute that much, but the cancer can spread. The virus can spread itself. Spickless. L1GHT. I'm using US100 capital.com prices. So, but still the price action is the same. There may be a difference of around 80 points or something, but the price is still saying same. 14 seconds. If we get a closing above this previous candle high, then the broken, this is still not that good of a broken trend, but still it can be considered as that. Sometimes relative closing can also extend itself towards the higher time frame, but still we got our target. Then if it wants to, it can come up to 399.7, but when, I don't know. 399.7. 399.7. 399. Nah, 2339. 2339. 2339. Yeah, giving me a relative close. The new 5 minutes has opened. We have gotten the validation on the 5 minutes. The 5 minutes, from the 5 minutes point of view, this is the new 5 minutes. The 5 minutes allowed to go below this point within the next 4 minutes and come back up and not give a closing below the previous 3-5 low. If it does, then it's going to be a contradiction, and the 1 minute is expanding itself. 4, 8, 4, 7, 4 minutes till the 5 minutes closes. From the perspective of the hourly time frame, you see this point. This is the new hourly candle. It's allowed to, from the downtrend point of view, the higher time frame point of view, it's allowed to move up and wick up, but not give a closing up. From the bear's point of view, I'm not saying that I'm in favor of the bears right now. Okay, from the logical standpoint, that's the logic I'm using on a 1 minute or a 5 minute, that's allowed to go up at a certain, within that certain time frame, but not give a closing within that certain time frame, right? So from that point of view, that was my target, and I have achieved my target, and I've gotten out with the 90 points. 33 points partial, and the rest, like 40 points on the remaining position. Okay, that's a direct closing. That's a direct closing on the 1 minute, but it can still be fake out. Still can be. Being an optimist. Optimism pays, bro. It's leaving wickless candles. That's not good. That's not good. Yeah, yeah. E- Within halfway till the fifth. See this, see this, see this, see this. Now we are going down again. If the next 24, 30, 23 seconds closes below this low, then the 1 minute is being spread. The virus is spreading, but still I'm out, so then not a problem. I'll still try. I'm going to, if for example if I missed all of this move, I will still try it again just for reference point. I'm not going to show my exact execution. I'm following, like I'm explaining every part of the trend and explaining how to manage the trade. But still, if I would have missed this move, I would still try it. I'm telling again and again it again from these points using these confirmation methods. Okay, we have how many minutes till the 5 minutes closes? 1.23 seconds till the 5 minutes closes. The 5 minutes invalidation would be, I hope you don't get lost in the lines, but please follow along. 5 invalid, 5 invalid. Okay, let's go on to the 1 minute time frame. You see this point where it all started. This point is where it all started. Then again at this point. Then again at this point, the spreading cancer. Okay, so I'm going to remove this red line and plot another thing magical. That would be the gauge 246.2. Where is my gauge? 240. You remember this 5 minutes invalidation line? 246. Let's go with 246.2. Let's see. This is the gauge. Okay. We have gotten the closing. Yeah. The same logic which initiated from the 1 minute has extended itself to the 5 minutes. But still on the 15 minutes, the higher time frame is still valid. For down now from this point, 249.3 to 278.8 is the dealing range for the 15 minutes reference points. This one is imbalanced. I'm gonna mark that imbalances with a yellow line, um, yellow line, just for your understanding. Okay, the 1 minute every candle is not getting a closing below or no, or the above the previous candle high. So moving back to the gauge, the 5 minutes closed below. The 5 minutes allowed to move at this point. For this to be validated, the 5 minutes was allowed to move up to this point, the dealing range, but not give a closing above. If it would have given me a closing above this point, then that would be a considered a larger range, but still the uptrend would have been still intact. Let's see how we are reacting to the gauge. Woohoo! Let's see if the gauge has the strength to change this shit. If not, then the gauge is telling us something is not right. Anything on my chart which is yellow is usually temporary. Okay, the gauge is good. If we get a closing above, ooh, ooh. How many points from the gauge? 14 points with no risk generally. Okay, okay, that's good. This is the surprise bar. Now the 1 minute is still intact and can be this from this point to this point. Now the risk is high, but still 14 points. This is leaving motherfucker. This is this is weakless and imbalance, but still it's okay. Come back. See how many minutes till the 5 minutes. I hope you can see this. The 5 minutes validation. It's allowed to, if within the next 1 minute we give a closing above this on the 5 minutes, then these two would become invalid and we will continue towards the upside. But on a 1 minute, we have gotten a confirmation of the break of trend towards the upside again. The 5 minutes invalid is being used as a support now. There are a lot of entries, like brilliant, brilliant. L1 GHT. What messages are you deleting? Okay, so on the 1 minute, we have gotten the confirmation. The ideal case would be for the price to for this to remain intact. This should not close below the 18 level. This is wickless. - 23 seconds. Chop got validated at this point at 15,320 level. The 5 minutes is wickless again from the upside. Gonna mark that line yellow. It's going to refer back to this point. 47. Again. Brilliant. Now it's leaving these wickless candles, and that's not a good sign. Now it's moving back to that point again. Now it's going to come back at some point at 15:23. We have about 23, 15 minutes. Will close in about 7 minutes, approximately 6 minutes. The 15 minutes invalid. 15 minutes would be invalid. Fifteen minutes invalid, and the gauge. I don't hope it's short. The chart is not getting really messy. I'm gonna remove this garbage. This is the new 5 minutes candle. One is more leaning towards the downside. It's wickless again. Twenty-six. 4 minutes approximately till the 15 minutes closes. These two 15 minutes are just doji candles. This 15 minutes, if it gives me a closing below this 15 minutes invalid, then the whole structure will probably not be as favorable as I want it to be. But anyways, I have reached my target. This was the point. I'm just making a case for the bulls with respect to the structure. And there we go. Watch how from this point to that point, and I've taken my profit at that point. Good, isn't it? If it gives me an opportunity to buy it again at some point in here with this with the good confirmation, then I'll do so again. On a 5 minutes, if you remove all of this, this was the first validation we've got on the 5 minutes. This would be the second within the next 1 or 1.5 minute. If it gives me a closing below this point, then this whole structure will break from the point of view of the 5 minutes and also on the 15 minutes, because on the 15 minutes, that was the low. It's still going down. So I think that was it. We have basically 1 minute till the 15 minutes close, and if it goes up like 20 points in a 1 minute, that would be good, really good, but that's not really probable. Just wait a minute. Okay, so the 15 minutes got invalidated and the structure is broken. Last 30 minutes till the market close. 5 minutes. Remove. Let's just on the 15 minutes. This is a 15 minutes time frame. From the hourly point of view, see what I was talking about from the start. It's allowed to move back up. If it gives me a closing, that would be a good indication for the trend reversal. Okay. Okay, so from the start of the stream, as I mentioned, okay, these are the prices which is going to be revisited at some point in future. So that's probably that probably will happen. I don't know when, but from the start of the stream, this was the target. We have reached the target, taking out 90 points overall. I've taken out the partials at 30 points and the rest of my trade at exact this point. So it got that precise. Now the 1 minute is trying to rebuild on the trend. This is another indication, but that's not. I wanted to spread it to at least 5 minutes for it to continue. For me to be interested in the structure again, for the point of view of from the point of view of the bulls, I want the price to close above this. On this is a 5 minutes time frame. Close above 240.9. 5 minutes. Otherwise, I'm not interested. Anyways, I would believe on the 1 minute. If the 5 minutes closes up to this point, then I'll believe the 1 minute. The 1 minute is trying, but I want it to spread first. Let's see where the gauge is. There we go. I want it to close 5 minutes. Within the next 3 minutes, it should stay above this point. Then that and the next candle would be the dealing range of this. Nice. But you have to keep in mind that uh, 15 minutes. From the point of view of 15 minutes, it closed below that point. So, not the ideal. It moves up. This was our next target. This is imbalanced. 7 uh 272.2, 27 272.2. Next would be 337 candle is imbalanced. I want the price on the 5 minutes to stay above this point, 240.4, for the next 1.5 minutes. That would be a good indication for the structure again. 324.4. So the 15 minutes is invalid after close of the previous 15 minutes. So the wick 15 minutes is invalidated after a candle closes the previous 15 minutes closest or wick. Brother, every trend starts from basically 1 minute, it expands to the higher time frame. So I'm using higher time frames as confirmations and using 1 minute as initial move. So if I'm front running a move, I can see that the 1 minute is trying to build. If there's, for example, if the new 15 minutes candle opens, it moved to the a wick below, but there is still 13 minutes left to it. So I would be, if I am bullish, if there's a big if of the bias, right? If I am bullish or if I'm trying to buy it, I would be hopeful that it might not give me a closing below the wick. And if the 1 minute structure is supporting my bias, for example, if it starts to support my bias at this point, it started to support my bias at this point, I can front run it from this point with a very tight stop, right? If I wait for the confirmation, for example, if I wait for the confirmation as it's moving up, the my risk is getting higher and higher. If I front run it at this point, logically speaking, my stop loss would be really good. And if it comes back, it can knock me out, right? No problem with that. It can knock me out with a 11-point stop. So that's not a problem. But if I am taking the trade with a good confirmation, it's my stop loss is huge and it starts to come back down again. So that's really a problem. So I should not be taking a big loss when I'm wrong. You get the point, right? So this is first I come up with a bias, then I'll use these things as confirmation or validation or invalidation. This is the like final part of this thing, what I'm doing. Fine. For example, if you see this point, how precise this is, you see how everything is so precise what I'm using. So it's not a standalone strategy. This is the confirmation at the areas of interest. So basically, if the 15 minutes is giving me a closing below or above, right? So this was the validation of the 15 minutes. First validation, it gave me a closing above. Then this candle was the relative close. Relative means ke 1 or 2 or 5 points different depending on the time frame than the 8 year. It's still relatively close, but this is not relative to that. This is a huge closing and a obvious closing above this point. So relative closing are allowed, but not the obvious ones. For example, if I would have to front run this 15 minutes or the 5 minutes candle, you see this within the next 5 minutes was the point, right? this is now validated. This 55 minutes is now validated. Okay. When will I take this trade now? Then I'll go to the 1 minute time frame. Okay. Then once it's validated, can I buy it straight now? No. I want 1 minute time frame to close above a previous candle high, then I'll buy, and my risk would be the previous candle low. Makes sense? So now the 5 minutes is validated, leaving this point behind. So it's not okay, I'm gonna jump in the moment it gets validated. No. Now it's, for example, I'm gonna make a narrative. This is where it got validated. How many time do we have left till the 5 minutes closes again and not get invalidated? So this would be the invalidation point, right? This is the 5 minutes invalid. Let's just mark it red. Like, we still have 1.27 seconds left to it. 1 point. I do not want the price to close below this point. Okay. If I front run it, okay, now as it's moving down, I'm not allowed to buy it right now. I'm not allowed to buy it right now because it's moving down. I want another candle to close above on a smaller time frame, then I'll buy it. Then all of this narrative will be validated. Okay. So as we see how it like uh, it helps me navigate the market and not take foolish trades. Doesn't mean it gets validated, so I'm gonna just buy it. No, depends on the risk to reward ratio in every case. So how many time do we have? About 30 seconds left. 30 seconds left till the 5 minutes closes. You see how again I draw this point and how it reacted to this point. So there's another thing. There are two ways of trading a market. Ways basically in every market. So there is a trending market and a ranging market. In a trending market, the market will what it's going to do. I'm specifically talking about the Nasdaq. Other markets, I haven't seen them working this good with this. They see this. See this. 50 seconds. This is the new 5 minutes candle. Where I'm gonna see where the 5 minutes previous 5 minutes closed. Okay, got validated. Still, that is still valid. It can chop around, chop around, chop around, but I want another 1 minute to close. I'm not gonna take this trade currently trade because it's not that favorable for me. It can still move up higher, but for example, I'm gonna show you either as it moves, it was moving above this point. I would have taken it with us with a point like 9 point stop. 9 point stop is nothing relative to the things like 9 divided by 36. So it's a good risk to reward ratio, at least 1 to 3, 1 to 4. So take some balls. Now it's validated. Even on a 1 minute and the 5 minutes is validated. But you have to keep this in mind. This is imbalanced. 46 candle is imbalanced, and within the 4 minutes, within the next 4 minutes, we have market on close. So on the market on close, we can expect something uh, of volatility, something of volatility. Let's move. See, it came back. Plus the 15 minutes closed. I'm gonna remove all of this. Okay, you see this point on a 15 minutes. It's a contradiction on a 15 minutes. We closed below the previous low, and this is not, as it's the 15 minutes time frame. It bears more value. It has more weight to it. So it's not the ideal. The moment it got invalidated at the 15 minutes, I'm just not trading. I'm not interested, generally speaking. So the any trend initiates from the 1 minute. So if I'm really conservative, I can just trade the 1 minute with keeping a bias of the 15 minutes and the 5 minutes. you have to keep this in mind. The lower the time frame, the more the fake outs. But this is the more ideal way to get an entry in the trend. And for example, if it starts to move up, 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 the moment 1 minute gets invalidated, I'll get stop. I'll get out. So it's a good way to navigate risk. See, it got validated. Now it's moving up. 48. So you have to build on the narrative, right? If I'm, l- if the next candle closes above this point, then I can expect something. Next 1 minute, this is a 1 minute time frame. If the next candle closes above the 1 minute, 24 seconds. Okay, so you want this is the only screen I'm showing you. This is you want three screens within your front of you: the 15 minutes, the 5 minutes, and the 1 minute. Plus, you have to have an experience of trading the market, like extensive experience of managing risk and all of that. So, okay, so this was the first validation. This is the next second validation, and this is the invalidation criteria on the 1 minute, right? This is on the 48. This is the invalidation criteria. I do not want the price to on the 1 minute to close below the previous this low. If it gets closing above this point, this would be the validation, and this would be the invalidation criteria. And now, as for example, if you would have taken this trade, it came back for you, right? So this would be a 20-point move with like 10 points risk. Generally speaking, 10-point risk with respect to the 15 minutes invalidation criteria. So 1 to 2 risk to reward ratio. And this is what I'm being really conservative about. Can you even imagine like 1 to 9 risk to reward ratio? I was like 7, 8 points risk. And most of the time, my stop loss was at break even. So 80 point, 92 point relative to 7 points. Okay. Now you have to keep this in mind. Okay, this was invalid. If it gives me a closing below, then it's gonna get invalid again. So the moment it gets invalid on the 1 minute time frame, I'm gonna get out. Easy, easy, without hoping. Okay, okay. Why? Because it's very easy to get in a trend when you're looking at it from the point of view of the 1 minute. The moment it gets validated again, you can jump in with a small risk. This whole area, if you look at it from the 15 minutes time frame, uh, right? It's all working within this reference. It got invalidated, and the validation criteria for the 15 minutes to build on would be that this previous candle high, the 257.4.8, to close above this candle for me to be interested in. Like, the higher the time frame, the better it is for the confirmation, right? Okay, as the VIX, see, this previous candle is wick down. Okay, now we have 25 seconds. If the new candle opens somewhere around here, for example, the new candle opens somewhere around here and it has minute to it, it's allowed to move this point within the like first 20 seconds, 30 seconds, and then come back and close relative to it. That would still be valid, not that worse, right? Or close above. So the VIX would allow its movement. The higher the VIX, the higher the ATR. Okay, so you can see 52. Okay, MOC started. Market on close. Market on close. Let's go. Market on close. 319. 319. See, this is still being used. This is still being used. 319. 319. Yeah, 10 seconds. If it gives me a closing above this point, being an optimist, I can still consider it as good. But in that time, in the times of high volatility, this might not work. So it's market on close. This is how the natural market works, not the in matlab, hey, still 23 points, still is valid. It can come down, close below. If it gives me a closing below, then it moves up and gives me a closing below. So one or two times can give me a good indication that it's going to be a choppy market and I'm not going to be interested in it. And if there's a contradiction between three, so you don't want to touch it. Ideally speaking, you don't want to touch it. There may be a surprise bar, like for example, if it on a 1 minute is, make sure that it closes below the previous 1 minute, then it's gonna move up. So on a 1 minute, it does that more often. So there are a lot of things you have to keep in mind while using this. 5 minutes, 39. Okay, let's see where the gauge is. Five minutes about to close. The last 5 minutes about to open. See, it's making sure. The 5 minutes, we'll see where the 5 minutes closing. If it closes below the previous low, then I can expect some. No, nope. See, like it made sure that it closes below the previous low. If it closes above this high, then this all would be invalidated, which the trend is like initiating from the 1 minute. But even if the 1 minute gives a lot of fake outs, but risk is really low on the 1 minute. Okay, where is the gauge? Gauge. 245.2, 45 point. Made sure that it closed below this point, but it's relative to that. This is the 5 minute structure. This is the 1 minute structure. We have basically 4 minutes till the market closes. Whenever if there's a fake out on 1 minute, if there is a fake out, assuming fake out, it makes sure that it closes below, then there's a massive move. I don't know if it's gonna happen now, but sometimes if there is a fake out on a 1 minute, it triggers a lot of orders. So it moves to the wrong direction then. Wrong meaning the opposite to what it wants to you to see. 23 seconds, even if it closes above this 56 candle high, that would still be good. But you have to keep this in mind. On a 15 minutes, what's happening is this is what's holding price. Hope you can see this. This is what's holding price. 3 o'clock candle. Supporting towards the downside. 2 minutes till the market closes. Gives me a closing above. The market has already moved a lot down, right? So usually whenever the market hasn't moved the whole day, it moves after the market closes in the after hours. We'll see. 20 seconds. Nah, still not getting a close above. 1 minute structure, 1 minute structure, 1 minute structure. Come back to this point. These two candles, yellow. These two, which I was referring to from the start of the stream, the 31st candle, 31, 14, 31, and 18. 18 are imbalance. So the price is going to refer back to this point at some point in future. So I think this is what's happening. Yep, yep, yep. First one and the second one. You have gone full circle on the stream, right? Touch this 91, 2091, 2191.7. Okay, I'm just gonna close the stream before I go. Okay, from the start of the stream, this was where we started. Like exactly, this is where we started the stream. It moved up. This was my target, and I got out completely. And I mentioned again and again in a stream one point that it's going to refer back to these points at some point in future, which is doing right now. The second thing was, if you remember, the second thing was on a 1 minute on a 1 hour time frame from the downtrend's point of view. If you use the same logic, the market is allowed to move back up to this point, but not give a closing above. So that also happened. So hello, Ray. How are you doing, my G? Long time, brother. So it was a really good stream. Did you saw the whole stream or you missed it? got 90 points live. Okay, so that's you've gone the full circle. Okay, 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 okay. So this thing is once again, I'm gonna mention this again and again and again. It's going to refer back to this point. Keep these coordinates. Keep these coordinates. I'm gonna show it again. Good risk to reward ratio. That's all I'm gonna say. And it's going to be relevant for the next 2 or 3 days. Oh, okay. You should rewatch it. There's a good scalping strategy. I've explained it in really, really detailed manner. So really good strategy. Okay, thank you guys. I hope you like the stream. Um, okay. 1 minute structure. 15 minutes. Fine. Okay, I'm gonna go.